It's MrConectr. Welcome to the financial revolution. Welcome to the great awakening. I hope everybody's doing good today. On this Thursday, we've got a lot to get into. I've got all the details in your market intelligence report for August 6th, 2026. Let's get into it. Geopolitical and macroeconomics. Status. Diplomacy window is open. Labor is still tight into the non-farm payroll, though. Details. Macro tape remains anchored to a possible U.S.-Iranian path on the Strait of Hormuz, with public comments framing a near-term deal window and mediation still running through the regional channels. Live energy futures at this cut. Brent oil is at $81. WTI is about $76. Both softer versus prior close as deal hopes bleed the war premium. And we've got the Black Sea attack risk. And multi-corridor energy strain remain live secondary hazards, even if the Hormuz rhetoric improves. Details. U.S. initial jobless claims rose to about 200,000. That screens as a very tight labor market. Unemployment held near 2.4%. Separately, coverage flagged the Fed Chair Warsh as prepared to hike in September if inflation and bond markets force the issue. A hawkish contingency, not a base case. We should monitor the Hormuz transit reality. Non-farm payrolls and unemployment, and Brent sub $80 oil hold versus reverse spike. And the general crypto market, this is the year market cap down to 2.18 all time. Gives you kind of a zoom out picture on where we are at and hopefully where we're going. Let's see, we've got spot Bitcoin ETFs. If you look right here, this is the entire ETF life from 2024 for Bitcoin, and we've had 3 days of positive right here. You know, there was probably a week right here of positives last week, week before last actually. So each candle was a day, and 3 straight green days for Bitcoin. Let's look at our XRP ETFs. We've got a red day today. We've been straight green for it looks like about a week now, barely green, a few pumps, but as the price goes down in yellow, of course, it does not reflect the inflows and outflows, it looks like. So they're just manipulating this price to what they want, guys. Let's take a quick look at the Conectr coins past 24 hours. DAG is up the most, Sentinel, Energy Web token, and XDB chain, all leading the way on the Conectr coins. We've got spot Ethereum ETFs at around 60 million inflows yesterday. And going back to the Bitcoin flows, let's take a look at that again. ETFs should be green on the major candle there. IBIT 742,000 heat map. All right, come on, let's keep going. Explanation: the institutional ETF demand is real and accelerating into the range. Price confirmation above the mid 60,000s is still missing. Cheap volatility is not low risk. Dealer hedging can amplify the first real break. How about our sectors today? What are we doing in sectors? Crypto sectors. MVB is up the most, followed by privacy blockchains. MVB. What is this section MVB? there's a different sector that pops up all the time, it seems like. But we've got Velvet and Binance Attestation Services and Space ID, MVD. I'm missing that. Let's ask Copilot. Copilot, I'm looking at a section for crypto called MVB. What does that stand for?
So in the crypto world, MVB typically stands for Most Valuable Builder. It's often used by blockchain ecosystems or platforms to highlight developers or projects that are making a big impact. So you'll see these MVB programs or awards that sort of spotlight the top contributors or innovators in the space. Anything else you'd like to dive into?
Oh, cool. I just wondering what that was. Most Valuable Builder. Okay, Velvet, Binance, Space ID, Biconomy. Lots of projects out there. I can't help but feel like America, United States, would definitely benefit from crypto clarity. I've got all the news on that coming up, guys. And we can have all these builders coming back in. Definitely. We've got some more details. Hardware wallet confidence stayed in the news after the cold card entropy exploit, with analysts arguing related ETF/custody channels could see a relative bid from risk-off self-custody users. They're not making self-custody seem popular, are they? They're definitely attacking that at a crucial time. We've got some details on Ripple. They highlighted full EU MiCA CASP authorization via Luxembourg's CSSF, with existing EMI rails framed as single relationship payments across the EEA. Stellar pushed the Stellar House in Sao Paulo calendar as the event. They had the event on privacy and compliance content and local market panels over there in Sao Paulo. Metallicus was quiet. Public ledgers looked normal. XRPL load factor 1. Stellar protocol 27. Healthy operations and transaction throughput at the snapshot. So everything's looking good on the rails. Crypto, traditional finance, and crypto convergence. Circle names a TradFi validator cohort for ARC mainnet for the 16th of September. Circle starting their blockchain called ARC. The public mainnet will have validators including BlackRock, DTCC, Visa, MasterCard, MoneyGram, ICE, Galaxy, Global Payments, Standard Chartered, SBI Group, Sumitomo, and Circle. Of course, Circle themselves. Validating on the ARC blockchain. BlackRock is expected to deploy Buildle on ARC as well. DTCC framed tokenization of custodied assets after that later in the second half of 2027. Day one DeFi access with the DTCC includes Aave, Morpho, Uniswap, and the gas will be paid in USDC. OCC National Trust Bank approved, already final. Coinbase USDC distribution deal renewed on the existing terms. Bernstein reiterated outperform $140 price target, citing ARC and partnerships as under-modeled revenue. This is the highest signal stablecoin infrastructure item of the cut. Card networks, DTCC, and BlackRock securing a USDC gas chain is rails, not narratives. Circle's making the moves with ARC and all these partnerships with them using ARC. We've got Western Union rolled out stable card with Rain, a digital wallet holding Western Union's dollar-linked USDPT stablecoin paired to Visa's card experience, targeting remittances and USDC-denominated balances across 37 markets. Solana-linked issuance in the coverage. expansion corridors in Latin America and Asia flagged for the second half of this year. Explanation. Legacy remittance distribution meeting card acceptance is how stablecoins leave the exchange loop. Watch corridor volume, not launch graphics. Tokenized equities add governance. Coinbase deepens the everything exchange. We've got Kraken parent Payward partner with Broadridge, so eligible X stocks holders can submit proxy voting preferences. Previously, they have no vote path, but the X stocks still remain non-US, non-UK for now, with prior greater than $25 billion cumulative volume claimed. Coinbase also launched 24/5, 5 days a week, 24 hours a day. U.S. stock trading for the UK users as part of its TradFi on-chain bridge strategy. ARK added about $17 million in Circle and about $20 million in SpaceX after Q2 prints, while SpaceX digested a large AI capex reaction and a $100 billion lockup, 912 million shares into Thursday's tape. Explanation. Governance on tokenized shares and 24/5 equity across are converging plumbing. SpaceX unlock is a risk asset volatility spillover. Watch. Not a crypto fundamental. And regulatory developments. Here we go. Here's our Clarity Act update. Clarity Act stuck on ethics, illicit finance, and AG text into Friday. Details. With the Senate scheduled towards recess as soon as Friday, August 7th, tomorrow, a month-long break into the midterms. Majority Leader John Thune had still not filed cloture as of Wednesday afternoon, even while signaling desire for the procedural vote. Democratic staff framed the movement as a standstill, pending three buckets: ethics, Trump family crypto exposure, and Senate agricultural tax. Possible paths: late closure this week, compressed floor vote, better happen today or tomorrow, right? Extended sessions past 7th of August. Well, hopefully they'll stay and actually do their job, stay late, get something done. You know, if they wouldn't have to stay late, just like at your job. You wouldn't have to stay late if you get the job done on time, right? But they could return date in September with only 14 working days before the midterm stretch. You know, and you're going right into elections. So you've got the campaign financing they're all worried about instead of passing bills to help the country out. We've got Russia signing a retail trading framework. So Russia's already signed their crypto legislation. That was yesterday. I think it sat on Putin's desk for about a week, and he signed it. Landmark crypto market law regulated exchanges, custodians, brokers, retail purchases of most liquid assets capped near 300 rubles or $3,700 per year intermediary. Qualified investors are uncapped after suitability tests. Exchanges need registration plus a minimum equity of 5 million ruble. Domestic payments ban stays. Ooh. Now, how lucky are we? Not lucky, but how good is it that we have our freedoms, that they're not banning domestic payments? You know, we've got companies that accept crypto directly, you know. So there's a lot of countries you can't even buy crypto. So recognize where you're at, you know. A lot of people can't even get into this stuff. And maybe that's a good thing, who knows? It's been a nightmare at times, and it's been really good at other times. And, you know, it's a roller coaster ride. You know, stay sane out there. Core rules for the Russian crypto takes effect at September the 1st. Some issuance rules go to 2027 with the exchange grace to into March 2027. In the EU, the watchdogs warns that scammers are impersonating firms and regulators after the 1st of July MiCA authorization deadline. 320 entities licensed on the ISMA's list versus estimates that 1,700 may need to wind down or restrict. Binance still a high-profile non-licensed case. Scammers impersonating firms. So they're registering in the EU these firms that want to deal with crypto, and you've got scammers that are pretending to be existing firms. Interesting. What's the benefit of that? So the scammer can claim legitimacy, maybe. Explanations. Two different charity stories. Russia legalizes supervised speculation without payment rails, and the EU license cliff creates consumer fraud surface area, even as compliant firms gain passporting. That's just, they write laws, and it's like the more laws they write, the more it takes away freedoms usually. And you know, crypto does need laws though, but we'll see what they write. We'll see what they come out with.
It's just an accounting ledger. It's almost immutable.
RWA and DeFi. We've got the tokenization news here. RWA.XYZ networks. I did look this up. Distributed asset value, 37 billion versus the representative value, 398 billion. So almost 400 billion in representative value. The big difference in between those two is on this one, with only 37 billion, you actually own the asset. If you own a representative value, you own a record keeping of the actual asset. So there's a big difference there. You know, why even put it on a representative value? You know, that gets into when I did that research on the DTCC operating on their back-end private ledger. They want to tokenize everything on their back-end private ledger and then mirror it over to the public ledgers for me and you to trade upon. And that's what this is. You don't actually own the DTCC stock when you're going to be trading that. So I'm really interested to see how many companies don't go public and even deal with the DTCC versus staying private and issuing the asset themselves, which is what that is to me. Still a lot to be figured out. I'm just trying to grasp an idea of how all this is going to work. Details for RWA deposits triple to 7.4 billion as broad DeFi deposits slip. From the market intel report, RWA details coin shares and token terminal Q2 read RWA deposits across DeFi more than tripled year to year to over 7.4 billion, while total DeFi deposits fell 15%. But I like this, how we can split it up and see exactly going on. What a good website this is, rwa.xyz. We've got gold tokens, XAUT and Paxos Gold, and yield dollar products drove most of the secondary flow. Look at gold having a little run. This is the year to date. Let's look at the month. A little bit of run here recently, and lots of tokenization of this asset. We've got hyperliquid RWA share, Gulf private credit, and Vault pipelines coming up here. Coverage put RWA contracts at about 32% of hyperliquid Q2 trading activity. And also Nomura's Laser Digital made a strategic single-digit millions investment in UAE L1 ZIG chain. pairing risk framework governance to private credit vault pipeline with claimed greater than $50 million originating and no defaults to date in the ZIG market messaging. Also, separate digital lending adjacency, Marex, M-A-R-E-X investment into Prime Digital, a token net infrastructure. The perps on the tokenized exposures and regional private credit vaults are the live RWA products, surface execution, and risk frameworks matter more than chain logos. That is right. Let's get straight to our AI and blockchain. The ELIZA token is winding down. We've been covering that. That was AI 16Z's kind of a predecessor token. It is shutting down after class action settlement consumed the remaining treasury. The token, once hit fully diluted volume, is now residual. It once hit a multi-billion fully diluted volume, and it's now residual, with the product saying it will keep building agent software without the coin. Separately, more rogue agent eval incidents. Starting to see a lot of the it's with these agents, AI agents, they are giving us so many possibilities about what we can do. Anyone can make an app now with an agent, vibe coding the app. They say like apps might be a thing of the past soon, right? They say it just might all be your agent. Even websites like browsers, I've seen where there's technology where instead of using a browser, you just use the agent, and the agent creates a lookalike browser. So you think you're actually using Chrome and all the infrastructure built into Chrome, but you're actually seeing just a fake page that looks like Chrome. And everything you want to do, the agent's inventing it as it goes. It is the wildest thing. It's kind of hard to understand, but yeah, we might be going to that where everything is just an agent. And if you want to, you want to go browse, it just creates the browser as it goes for you, for the direction you want to go. And it is wild. Also, where were we at? Separately, more rogue agent eval incidents. We had the OpenAI Anthropic Meta testing escapes, which they escaped their container because it wasn't locked down correctly. There was an avenue for it to get out of the container. I mean, I'm not sure what's up with that, why it was left vulnerable during that testing. It sounds kind of simple to me, but I'm not a engineer or anything like that. But it sounds like they should have containerized it better, restricted it better. But anyway, that was the big Hugging Face incident. Mistin Labs chief tech joined Anthropic on AI security. This AI infrastructure can survive a token collapse. Speculative AI agent coins cannot survive empty treasuries and weak value accrual. So, AI agent coins. Maybe we can see if there's specific agents coins. Here we go. Oh, of course, virtuals by market cap. FET, artificial superintelligence. Kite, Origin Trail, Unibase, AI rig complex, AI agent coins. Where's Tau at? I thought that was one too. Tau is very interesting, guys. If there's a problem in the world, you can donate your AI agent resources to solve a specific problem. And each specific problem is a separate Tau net that uses the token Tau. bid sensor. Very cool. Cool. We're still on agents though. Let's get back to that. AI and blockchain. Galaxy printed an $85 million Q2 net loss as digital asset weakness hits, even as phase 1 AI data center leasing was framed near $80 million quarterly revenue run date from Q3. Galaxy taking a hit. I think we'll start to see a lot of hits with all this infrastructure being built until we see it at full use. What are they using all these data centers for, guys? SpaceX first post IPO earnings shock, heavy AI spend, and Thursday's large unlock kept the AI trade digestion theme in macro crypto crossover. Compute build-out is real cash flow for some crypto-adjacent names. It is also a capital rotation rival when AI equities whip. All right, cool. Let's get to our prediction markets. All right, fun section here. Polymarket Clarity Act signed into law 2026 trades about 15 cents yes and 85 cents no. Parallel market on Senate vote before August recess, 11 cents yes. Broader crypto market structure law in 2026 is about 20 cents yes. Same day Bitcoin ladder above 64K on August the 6th, 73 cents yes. Levels through 62K essentially locked yes at this cut. Explanation is the crowd has largely abandoned a clean 2026 statutory win and pre-recess floor vote. Process risk is the hottest base case unless closure appears in hours, not days. So maybe we'll see closure today. Maybe it's happening right now. We shall see. But they are abandoning the yes votes for 2026 clarity. Not financial advice, but I'm sure if something happens to happen this year, now would be the time to get in on the yes votes because they're so cheap. They're only 11 cents for a yes vote for clarity. Interesting. Let's take a look at these actual prediction markets. Polymarket versus Kalshi. They dominate the global prediction market, holding 97.5% of share in 2025, with Kalshi leading in regulated volume and Polymarket in decentralized liquidity. Yep, Kalshi's more of a Solana stablecoin, and Polymarket's more of a Ethereum Polygon betting. Volumes. They need to update. This is still 2025, but yeah, the entire year, Kalshi had $238 billion volume, and Polymarket had $220 billion, with the smaller platforms making up $12 billion. Kalshi's volume surged 1,100% year over year. Polymarket saw massive capital inflows, including a $2 billion IEX-backed round. 2026 trends: the World Cup drove record activity, 6.2 billion on both platforms, with 4.3 billion on Polymarket. Combined monthly volume in June hit 44 billion, up from 75% from May. Kalshi is a federally regulated CFTC designated contract market, legally classified as a derivatives exchange, not a gambling. However, Utah recently won a federal case allowing state anti-gambling laws to apply to its sport contracts, rejecting the preemption from the CFTC. States battling feds again, and we saw the Kalshi lawsuit in New York. They want their cut. Business model is Kalshi's compliance first, identity verification, integration with stablecoins, partnerships with financial institution. Polymarket is liquidity first. Token economy, decentralized governments, broader category coverages. So if you're choosing between the two, it looks like Kalshi, you're going to choose compliancy first, ID verification. And I think you can probably get in that easier than Polymarket because I am on the Polymarket waiting list. It's been probably 4 or 5 months now. Kalshi leverages federal regulation as moat, targeting institutional adoption and mainstream events. Polymarket builds network effects and token incentives, aiming to capture retail and speculative traders. And we've also got prediction tokens by market cap. Gnosis, GNO, Augur, Rep. Oh, they've been around a long time. Augur, I forgot all about them. That's right, predictions. They've been doing predictions. They were probably the first, if I remember correctly, Augur. Still in the game. What's the market cap on these? Gnosis is 280 million is all, and 9 million on Augur. And the 7-day, anything popping off? Hey, Anon. And what else? We could look at some of the volumes. Rolling volume for Kalshi is, in the past 24 hours, is 490 million versus Polymarket is only 161 million. 7-day on Polymarket is 1 million. 7-day on Kalshi is 3.3 billion. I'm sorry, Polymarket was 1.1 billion. Kalshi was 3 billion. So Kalshi's leading in volume. Top markets are sports in Kalshi. Los Angeles Dodgers versus Chicago Cubs today, $4.9 million in volume. Top markets on Polymarket is Dota 2, Team Falcons versus Team Liquid Sports. Not even sure what that is. Dota 2. Okay. Category breakdown, Kalshi. Politics get 13. Actually, volume is 3 million is all. And Kalshi. Polymarket makes up 7.5 billion on politics. So it depends on what you want to get into, on which market you like. Then you need to go look at this page, d5rate.com. Not a sponsor. No sponsors here. No financial advice here. We've got, so if you know what kind of markets you like. If you're really into sports, look at Kalshi's 225 million in volume versus Polymarket's 42 million. So you're going to choose Kalshi. But, you know, go here to this website and see which markets you like. Cool. Let's get to our risk opportunity analysis for August the 6th, 2026. Clarity missed recess, 2026 statute failure, standstill on ethics and illicit finance and agriculture text into Friday. Markets already priced at low odds. More risks. Hormuz path fails. Oil reserves. Deal talk is priced into softer crude. A breakdown reimports inflation and risk off faster than ETF big can offset. The low volatility coil snap, about a 36% IV floor. Subdued depth means leverage and dealer hedging can accelerate the first break either way. Self-custody confidence shock. Cold card class exploits push marginal users towards intermediaries. concentrating operational risk. Yeah, new users will not like these hacks. They're going to stay with centralized entities, whatever that is, an exchange, a bank. They're not going to get into the on-chain stuff. It's going to leave me and you and the entities playing in the on-chain game, right? So maybe we can be the market makers for the market takers, the banks, the big entities, the exchanges. All right, MiCA's winding down fraud surface. Unlicensed EU exits create impersonation scams against confused users. Dang. Wow. The more you add on, the more you complicate things. Especially with taxes. We'll see what they do with taxes. Is that in the bill at all? You know, the only way crypto works is a flat tax, right? To charge everybody the same percentage. That's the only way all this works, if you ask Conectr. That's just my spin on it. Opportunities. 3-session spot Bitcoin ETF bid. We got 3 sequential positive days as real institutional demand into a still compressed range, though. Monitor the Circle ARC validator set. Visa, MasterCard, BlackRock, DTCC, MoneyGram cohort is a concrete stablecoin settlement network milestone. Starts September 16th. Western Union, Visa, stablecoin distribution, remittance is a giant, putting USDPT on card rails across 37 markets. RWA utility divergence, deposits into a $7.4 billion while broad DeFi strings. Treasuries yield dollars used as collateral and tape inventory. EU MiCA CASP plus Stellar LAT AM institutional calendar. Jurisdiction and corridor work continues regardless of the U.S. floor drama. That's right. They are building it out regardless of what happens, guys. You cannot stop an idea whose time has come, and we're going to push this through somehow. We've got word that the agencies, the CFTC and the SEC, are ready to go if clarity is not adopted. And throw in an executive order on top of that as well. Just my prediction. We should respect the 63 to 65K Bitcoin ban into the non-farm payrolls. 3 green ETF sessions without a breakout favor patience over Chase. Define invalidation under the range, not vibes. Watch the Brent Hormuz confirmation, not headlines. Oil already eased. Only sustained corridor normalization keeps the macro bid honest. In the midterm, next 1 to 3 months, prioritize real names and corridors over AI agent tokens. ARC mainnet, September 16th. Western Union stablecoin adoption metrics and RWA collateral growth are cleaner than speculative agent tickers post Eliza. Eliza is no more. Map EU, MiCA winners versus wind downs. There's about 320 licensed entities in MiCA versus mass exits will reshape the European distribution and scam risks. Yeah, we've got all these entities pretending to be other entities, gaining the certification from MiCA. Wow. Sounds to me like the entities need digital ID as well, especially any business that takes money from the government. I feel personally that all of your expenditures should be on a public chain if you take tax dollars. Yeah, especially these nonprofits and these organizations. We need to follow them. We need to keep track of our money and realize where it's going. And everything in government as well. Every government expenditures. I mean, where did we get? What happened? We were involved in cleaning up the government when Elon was there. He even found magic money printers in the Treasury. Can you imagine a nation that just has unlimited money printing and devaluation of their own currency? Unlimited. Just hit a button and send money anywhere you want to in the world from the Treasury Department. I think he said it was 5 magic money printers, computers. Oh, wow. I'd like to know more about that. Long term, 6 to 12 months. Stablecoin settlement networks with CAR, DTTC, BlackRock adjacency, ARC class designs plus bank tokenized deposits are the structural rebuild of the dollar rails. That's right. RWA as default on-chain collateral. If deposits and secondary volume keep rising through crypto winters, portfolio construction shifts from pure token beta to tokenized cash, credit, gold. Jurisdiction competition, the EU MiCA passporting, and Russia's supervised speculation model, and the U.S. statute delay create a multi-speed world. Rails firms will multi-home. That's right. All right, let's get to our warnings. Geopolitical energy corridors, Hormuz Strait, Black Sea can reprice inflation and risk assets inside a session. U.S. market legislation remains binary into recess and midterms. Do not treat agency goodwill as a full substitute for statute. ETF flows reverse. 3 green days are not a permanent bid. Smart contract bridge and hardware wallet failures remain live. Tail risks. Prediction market odds are crowd prices, not forecasts or advice. Stablecoin and tokenized asset products carry issuer, custody, liquidity, and regulatory risks. This cut mixes completed ETF sessions with incomplete same-day rows. Do not invent today's primary market total before the table prints. Yep. And did I miss a section? So I did. Yeah, I did. Did I do AI recommendations? Yeah. Track clarity, closure. Just making sure I covered everything. Went through the warnings. Still getting my showdown. Key metrics to watch. Bitcoin banned 63 to 65K into Friday. Spot Bitcoin ETF last completed session. $244 million inflows. Watch August 6th, see what happens. Watch today. See what happens today after 3 days of positive ETFs for Bitcoin. Oil at 81. Clarity, closure, filing, binary. Let's see if they run on closure today. You know, that could set them up and get this done within 2 days. And whoever's betting on the Clarity Act for 2026 might be in good position if it happens. That's a good chance to take with the odds, you know. Not financial advice, though. Everything here has been your daily market report for August the 6th, 2026. Thank you guys for tuning in. I hope you guys have a great Thursday, and we'll see you on the next one. MrConectr out. Peace, guys.